Welcome, everyone, to the AltAccountant Podcast. Today, we're interviewing Todd Shapiro, who's the president of the Illinois CPA Society. So, Todd, welcome to the show.
Thank you. Thank you very much for having me.
Hey, Todd, let's give the audience some context in terms of what is the Illinois CPA Society and what your role is there as the president.
Yeah. The Illinois CPA Society, every state in the United States, and actually 5 different territories, all have state or territorial CPA societies. We represent CPAs within the state of Illinois. We work with the AICPA. We are not a chapter of. We are 100% independent. I always refer to them as our sometimes our greatest compatriot and sometimes our greatest competitor. So we work with the AICPA hand in glove in many things. But really, we represent CPAs in Illinois. Our mission says it all. The mission of the Illinois CPA Society is to enhance the value of the CPA profession. What we do is we actually established 4 strategic pillars a number of years ago. I've been in this position for 7 years now. We enhance the value of the CPA profession. We do that through education, information, advocacy, and connections. And we think by doing those things, we enhance the value of the CPAs in the marketplace and help them to be successful.
All right. So let's break it down real quick. So it's education. Let's go through them. Education.
Information.
Advocacy.
And connections. So really think about it. How do we help educate members to become better CPAs and better professionals? How do we provide them with information, either through our magazine, our white papers, our website, to again help them be more successful and have the information they need when they need it? How do we help them connect to other people, other CPAs sometimes, and sometimes other non-CPAs? And then how do we advocate for the profession? And advocating for the profession is what we do down in our capital of Illinois, Springfield, Illinois. We advocate for our goal is to try to help the CPA from a regulatory and legislative standpoint to keep that playing field as level as possible and ensure that the CPAs aren't disadvantaged by the regulatory and legislative environment. Advocating also, by the way, gets into how we promote the profession to the general public. We'll talk a little bit later about our view on how we have to move the profession. That's advocating for the profession is not just a regulatory and legislative activity. It is an activity that goes well beyond that.
So what's interesting is on the education and the information part, if you are a member, you will have access, I guess, to the newsletters, to the magazines, access to the conferences and the continuing education. But if you're not a member, you still sort of get the spillover effect of advocacy because you're advocating for the all CPAs, members or not, correct?
Yes, we do. We don't, we would love every CPA in the state of Illinois to be a member. We know they're not. Whether you are a member or not a member, we advocate on your behalf. And non-members can attend our programs. Some of our programs, they get summary information. They may pay a slightly different fee to attend an educational event, but no, we advocate for all CPAs, member or non-member.
Absolutely. And let's talk about some numbers real quick, the numbers that you could discuss. So How many members are there in the society at the moment?
Yeah, the Illinois CPA Society, we are currently the 4th largest state CPA society in the nation. We have about around 23,500 members across the state of Illinois.
And do you know how many total CPAs are there in Illinois?
I would tell you that the estimate is around 40,000 CPAs in the state of Illinois in total. That's okay. Plus or minus.
So half the CPAs, more or less, voluntarily belong to the society, a little bit over half.
Yes. There's no requirement to be a member of the society. It doesn't affect your licensing. Yeah, I'll give you an example of how it really doesn't matter about the half. In the most recent licensing process in the state of Illinois, there were about 2,000 CPAs who did not renew their license or registration in the state of Illinois. Most of those people weren't members. We thought it was best to try to make sure those people knew about the process in case there was So we took on the cost of actually acquiring that information, actually mailing out a postcard to those people saying, hey, just your license wasn't renewed. And many of those people, most of them were not members. And the state, and a good number of them got, renewed their license as a result of that. So yeah, about a little over half, but ballpark half are not members. But we advocate for all.
Absolutely. And then on the connection part, I assume the biggest factor to connecting CPAs together and CPAs and folks that are in the profession that might not be CPAs is through your conferences and through your live events, correct?
That is the primary way. We have 7 chapters throughout the state, and chapters are more local on the ground. They have our chapters were a part of us, but they kind of run events on a monthly basis at a very low cost. So CPAs can go to chapter events, which are in their neighborhood. And think about Illinois. Chicago is a major part of Illinois, but we have a significant presence of CPAs downstate. So we have some downstate chapters. We have chapters around the Chicago area. So you can go to a chapter event. You can go to a conference. Our corporate members. We have I think it's close to 5,000 members who work in the corporate environment. We do not, by the way, call it business and industry, which is what the common term is. The people who work there actually call themselves corporate employees. So we call them corporate members. We give them that respect. And we created a brand called our Center for Corporate Financial Leadership, a brand of the ILCPAS Society. So, for instance, they have our CCFL Networking Breakfast, where, again, bring people together. So it's through live events. Some of those are just conferences where people meet. Some of them are very specifically designed for people to interact.
Absolutely. Thank you for that, Todd. All right. So let's talk a little bit about, let's talk about to the audience that maybe is not a member of the society, and they are in Illinois, or they do business with Illinois, or it would behoove them to be working, with Illinois-related topics. What are they missing? What does a CPA non-member it's missing from not being a member?
I think that again, because they can attend the programs, but it's hard to participate in something you don't know. You don't know what you don't know what you don't know. I always say you don't know what you don't know. So if you think about the opportunity, let's say you work in the corporate side and you're a CPA, and we know a lot of CPAs in the corporate world are not members. But you become very insular in your own world. And by not being a member, it's not that you don't even know you're missing something. So by being a member, you actually know that there's a CCFL, Center for Corporate Financial Leadership, or CCFL Networking Breakfast. By being a member, there's a chapter in the south suburbs of Chicago, so you can go to. So if you are not a member, you formally have to go and try and find it. And the reality is, people are busy, people are stressed. We have a very extensive in our education side of our business. We have a very extensive, high quality, on demand catalog of courses. Well, we tell our members about it, but if you're not a member, it's hard to talk to you. So the biggest reason I think to be a member is what you know versus you don't know what you're not aware of.
Awesome. And just to plug it real quick, the biggest event that you guys run is in August, which is the Summit 20, correct?
Yep.
How big is that event? Can you give us a 1-minute Reader's Digest version of?
Yeah. We have about 1,000 attendees come to that event. It is by far our biggest event. It really comes down to how do we provide a lot of content, of relevant education over 2 days. But we also have a fairly extensive exhibit floor, because one of our major responsibilities is to help CPAs prepare for the future. So if you were to walk through our exhibit floor, you're going to see technology providers that really are going to help CPAs be that CPA of the future. That's a major role. So the exhibit floor is very important. Some members will say, well, I don't want to walk to the exhibit floor because exhibitors will want to talk to me. Well, part of our, if we're going to be lifelong learners, it's not just the tax update. It's not just the audit update or the accounting update. It's understanding what's going on in the profession. That's what you learn on the exhibit floor. And we have sessions on that too. We'll have a technology session. On the floor, you may get real hands-on approach. So that's the whole point of our Summit 20.
Awesome. All right, Todd, let's transition to kind of the reason why I wanted to chat with you now that you provided some context about your role in the profession is, there has been, I would say, in the past decade or so that I've been involved in accounting, there has been sort of a couple of swings about sort of the central themes that affect our profession. One of them has been AI and automation, and obviously professionals need to get well educated about that, because if they're not, they're not going to know how to sort of join them and try to beat them, and they can't. You can't beat AI, you can't beat automation. The other sort of theme that has been a pervasive theme has been the fact that we are trusted advisors, right? And that's kind of split into two. I think one is trust, which has been an undergoing value of the entire profession. I think the AICPA has it as one of its fundamental values, that business owners should have a deep level of trust for their accountant, or they can rest assured that when they're working with their accountant, they can trust that accountant has the best interest in mind. And then there's the other concept, which is being an advisor, which means that we not only help with the basic compliance stuff, but also help them be better business owners, manage their businesses better. Now, you wrote or you co-authored a white paper called "Trust is Not Enough," and could you give us a Reader's Digest version of the central theme around it, and why is it important to think just beyond trust?
Well, so I'll start with two underlying principles. One, by the way, I need to give credit to the person who really put that together, Derek Lilly, who's our editor of our publications. So I can't emphasize enough how important trust is. If you think about this profession, and I've been with the ILCPAS Society, been the CEO for the last 7 years, but been with the society for 21 years. So I was here in 1998. I was here in the Enron days when the profession took a significant hit of trust, which results in the Sarbanes-Oxley. And over the last 17 years since Sarbanes-Oxley, we, the profession, every single practitioner, along with the ICPA, we've really rebuilt the trust component. Trust is the core of everything we do. We have to be able to have anybody, client, trust that what they're hearing from their CPA is correct and valid and can be relied on. Importantly, even the capital markets trust the information they get from an audited financial statements. It's critical to the capital market. We have a responsibility to protect the public good by, in fact, having that trust. That is an ultimate component. And so I'm not going to underestimate that. On the other hand, you brought up technology. And this is where, if you look, and I truly say this a lot, I think we are at a precipice in our profession. We've never seen technology and the rate of growth of technology like we are seeing today. And that is just going to, heard Barry Melanson say it, because here from somebody else, we're never going to see a pace of change that is slower than today. And I truly believe that. And it's accelerating. And the beautiful part of this Illinois CPA Society is we have members who work at the Big Four. We have members who work at that next group of the BDOs and the CLAs and the Crows and the RSMs and the McGladrys, RSMs, and I guess I said that twice. But I also have members who work what I call Main Street. They work on Main Street. They're small. They may be a 10-person firm. They may be a 5-person firm. They may be a 40-person firm. They deal with Main Street businesses. Technology is impacting our profession, as you said. AI and robotic process automation, RPA. I hear people say, well, those things will never be in small business. I always tell people, the only CPA Society is a small business. We're a relatively small business. We use products that incorporate AI today. We use products that incorporate RPA today. We use products that incorporate natural language processing today. Small businesses are beginning to accept that. And the reality is it's going to devalue. It's going to make, if you think about compliance services, doing an audit, doing a review, compilation, review, and audit, doing a tax return. Those are the services. Those are the activities that are going to be so impacted by technology. Now, trust, that underlying component, is critical to that. If I get an audit, if you do a comp or a review for me, or you do my tax return or an audit, I have to trust that it's valued. The question is, how is that helping me grow? You made a comment. You said advisor is something that helps people grow their business. The reality is, most of us don't, on a proactive basis, think about how we help our clients grow their businesses. I always go back to before I came to Site, I spent 20 years on the corporate world, on the corporate side. I worked for large companies, Unilever, Helene Curtis, Quaker Oats. And I say every single day when I went to work, I thought about one thing. No matter what the activity was, every day, every activity, everything I did was all focused on how can I help that company make more money. So do we think about our clients and think, how can I help them make more money? How to help them grow their revenue? How to help them reduce their cost structure? So it really got down to, if I going to where you're at, in the future, as technology grows and grows and grows, and the time it takes to do an audit, the cost it takes to do an audit go down and down and down. Is trust enough? Is trusted advisor enough? I say this to people, and I was just finished doing our town hall forums where I talked, I think, to over 600 or 700 people throughout the state, and I put something on the board. And I said, so typical CPA firm, owner calls a CPA, he's thinking of buying a piece of equipment, and I said, the typical CPA goes, well, here's the tax impact of doing it. I said, we're going to go good, better, best. Good CPA says, here's the tax impact. Better CPA says, here's the tax impact. Now, by the way, have you thought about leasing it or buying it? Best CPA goes, why are you buying the equipment? Do you need the equipment? What's your utilization? What's this? So it's taking us to the next level. As AI and RPA automate those processes, those compliance services, for us to stay relevant, we need to move ourselves to the next level. And one is, and by the way, the ICPA has been talking about their evolution of CPA, and that's very critical. That's very focused on making CPAs technologists. That's important. But 5 years from now, AI is going to be doing what a technologist does today. RPA is going to be doing that. So what is going to be left that's going to make the CPA the most relevant? Our belief is that we need to move to something like the most trusted and strategically valued advisor to our clients. And that is really where that's sort of the gist of the article. It's fascinating. I was just I met with two mid-sized firms. And when I say mid-sized, anywhere from 20 to 40 employees total in the last month. And I sat in the room and I said, so trusted advisor, what does trust mean? And I asked him. And it's fascinating. If you ask 5 people what trust means, you get 5 different answers. None bad. Reliable, accurate, dependable. You get 5 really good answers, which, and again, we're not saying it's not, but if I say, okay, now tell me what strategically valued means. Lot different response. So our belief is that as technology takes a greater hold in those, what I call compliance services, tax and audit, that the way we stay relevant is by mastering those. So for instance, we should be helping our clients we should be helping our clients put AI products in place. We should be using them ourselves, by the way. The Illinois CPA Society has an audit every year because we're not for profit, we have to. And literally we're to the point where if the tool was there, you could use a bot and audit every transaction we have within minutes. Well, why aren't CPA firms advising their clients to put the tools in place that we use that utilize those things, and then provide that strategic advice? So again, and by the way, don't wait for somebody to call and say, "Oh, I'm thinking of buying a piece of equipment. What do you think?" how do we position ourselves as the most strategically valued advisor that you're meeting your client on a regular basis? You're helping them think about, especially that small to mid-sized client, to think about how do I help my business? All comes down to how do I help my business become more successful? How do I help my client's business grow their revenue, change their cost structure? And that is something that technology isn't going to take the place of. That was probably a long way to say what the article was about, but that was
right.
just
Yeah, no, I like it. One of the things I wanted to touch base with you is the difference between active trust and passive trust. And this has been already started, in our circles of accountants talking about this concept. But of course, business owners should trust us not to give their social security number to the internet, right? Of course, customers should trust us to not disclose their personal information or their business strategy with their competitors. I mean, that's one type of trust. This is a passive trust, and I think it should just be table stakes, right? That accountants can be trusted to be discreet with the client's information. But there's the other level of trust is active trust, is trusting that person is looking after their clients in a proactive manner. It's active trust means that whenever that advisor gives proactive advice to their clients, they're not thinking about the liability of what if I give my client bad advice, or should I just stay on the safe side and wait until I'm asked a question to be able to answer it? I mean, there's a lot of differences between active trust and passive trust. Have you run into these two concepts?
Well, you're right. There's absolutely table stakes, active, passive trust, but I would even tell you passive trust gets beyond just saying I'm going to safeguard your information. I think passive trust is this, to a point. If passive trust is if I do an audit for you and you're my client, and I sign off on the audit statement that the financials are done in accordance with GAAP, you have to take that to the bank. You are comfortable taking that to the bank because I, a CPA, signed off on that. And I even think that's part of that passive trust. So it's more than just protecting their information. It's the capital market side. It's knowing that what you said is correct. It's if I do your tax return, you trust me that it was done, that you minimized my tax liability, that you didn't break any laws, all those good things, right? That I even think so I think passive trust to where you had it at this level of safeguarding information. I think that's table stakes. I think it's even now this critical part that I trust what you give me is accurate and reliable, that I can take it to the bank, or I can pay my taxes in accordance with the law.
That's competency. You're talking about competency.
But that's trust. I trust you're competent, and I trust that what you give me is accurate.
But that's also trust. But that's also table stakes.
I think it is. It absolutely is, and that is the core. The active trust you're talking about it's the most uncomfortable for most people, and most people will say what you. I had a number of people this week. I think about active trust, and I think about strategically valued, and they're probably the same concept. I had some people say, well, if I do an audit for a client, I can't give them advice because that's a violation of independence. And I say, if you do an analysis, I said, here's the thing. I do a number of CPA firms. I said this in our town hall forums. Part of doing an audit is you looked at aged receivables. And why do you look as an auditor at receivables to see at the aged receivables? Well, you're looking for one specific reason. You're trying to understand, are the receivables that need to be written off to make sure that the financial statements are stated in accordance with GAAP. That's part of that table stakes trust that you just talked about. If you're a business owner, you got aged receivables. That's nothing new to you, right? What you care about is what most businesses would call DSOs, days sales outstanding. You care about how many days your sales have been outstanding. Firm I just talked to was saying that they went into there and they didn't just look at receivables, they looked at the DSOs. By the way, when I've talked to most CPAs, this is not a negative, but when I talk to most CPAs and I use the term DSOs, days sales outstanding, DSOs, most firms will look at me and go, what are DSOs? This one firm that was talking to me, that I talked to just last week, said, and they have a client advisory accounting service. They said they looked at the DSOs. They advised the client to actually get a collection agency in to accelerate the collection of their DSOs. And that one thing resulted in a higher profitability client. One piece of advice. Is that a violation of independence? Absolutely not. Absolutely not. Now you can't tell the client, I think you should introduce this cost change and I'm going to go audit it. You got to be careful, but you can give clients, saying it's a violation of independence is not thinking about what independence is. You can absolutely give clients advice and information. Another part of an audit is to look at inventory. Is there any inventory that should be written off that's been sitting in the warehouse for eons and eons, right? Do we look at inventory turns? Do we look at monthly inventory turns to see if you're producing the right inventory at the right time to minimize your cost, to minimize that client, minimize their cost? So there's information that we can provide that you would say is active trust, I would say is strategically valued. The challenge is, some will say the client will never pay for it. Well, we don't know until we give it to them. The other challenge you said is it's hard. It's very hard. This isn't a checklist where you can say I did this and I checked it. And by the way, I'm so busy. The biggest reason I think we don't do this, the two biggest reasons I think we don't do this as a profession is, one, I'm not sure we feel comfortable doing it, to your point. My God, I'll give them advice and it will be wrong. But the other biggest reason is I'm so busy doing the compliance stuff and making good money doing it. Why should I change? Well, at the Illinois CPA Society, there's what's the old adage? If it isn't broke,
don't fix it.
Actually,
ain't broke, don't fix it, right?
Right. So what we say at the Illinois CPA Society? If it isn't broke, you probably should break it. So I think that's the biggest challenge we have as a profession. We're very successful, and I heard somebody say, and I don't like it, but somebody said, it's hard to hear about change when you got $100 bills stuffed in your ears because you're so busy.
Right.
So that's so I think that you talk about active trust. I call it strategically valued advice. I think it's the same thing. It's hard. It's not easy.
So I want to unpack a couple of things here because I'm a CPA. I've been practicing. I've been practicing in the profession for about 10 years, but I've been a CPA for 5. When I started practicing, I never did any attest work because I wasn't a CPA, and I quite enjoyed doing the sort of internal accountant work, right? Where I tell the client, press this button, press that button, pull this lever, pull that lever, and behind the scenes, influence the customer into just being a better business owner as a whole. When I became a CPA in 2014, I now have the opportunity. I've been bestowed the license to be able to provide, let's call it, higher level services. And higher is going to be a subjective term, but I think in the CPA world they call it higher level just because it's more risk to the accountant.
Yep.
Typically that means you can charge more, etc. I've never got into it because of the whole concept of independence, because I feel myself, and that's a choice I make. I'm one of the accountants that makes that choice. Not all the accountants need to make that choice. But I made the choice that I prefer not to have to worry about independence and provide value and create value as a non-independent CPA. Now, I'm still going to be objective, and I'm still going to be transparent, and I'm still going to give my customers choices, and I'm still, in one way, shape, or form, taking some sort of risk by signing that tax return or being alongside that person in a bank meeting, providing some financial insight, let's call it that, without necessarily being the person that compiled or reviewed the financial statements. And that's a personal choice I've made. But I know that one of the challenges you're referring to is for CPAs that do attest work, and they have really good clients with great billings to do their quarterly review financial statements. And let's even go beyond audits for a minute. Let's just say quarterly reviews. See, most accountants that do quarterly review, they're dealing with a mid-market client where that quarterly review is used in a bank, and they have a line of credit, and it's a physical,
right.
It's a requirement to have that CPA firm doing those reviews. Now,
Right.
because of that relationship with the reviews, because you have to ask those additional questions, because you have to look a little bit into the process of the data entry, you get tons of insight about how the customer is functioning and what decisions, tons, and what decisions they're making when categorizing an expense transaction, and how many people are being asked to approve something or to ask for a category, and where the documents are being archived. I mean, you get tons of insight around a large portion of the company's operations, and that's where you have the most more opportunity to give advice. But the problem is, exactly as you said, is wait a second, if I cross that boundary and I start giving advice and I start telling people, don't use Mac, use a PC, or don't use this software, use the newer version, upgrade your hard drive, or get rid of this person in the middle because that person's just adding pointless bureaucracy, or add this level of bureaucracy and require this manager to sign it before it moves this way. The minute that you start trying to influence the process, you break independence. So although you mentioned some situations where you think that giving just some educational advice about how to interpret their numbers, that wouldn't break independence, but many of our customers, that educational advice is just not enough. I mean, just like you have a magazine in your society and you send this information out. Do you think every single one of your members acts upon every single word in that magazine? No. They might need to go to a conference. They might need to go to a workshop. They might need to go to a training. They might have to see it 3 times and talk to 10 different people that are doing it and showing them how they interpret that work for them to say, okay, let me try this. So in many ways, there's some indirect hands-on effect on getting people to transform their process, and that would be very difficult for an accountant to do without breaking independence. So I believe, and I'm not trying to be the devil's advocate here, but a lot of the things that we're promoting, and I promote it, I do it and I promote it it is purposefully breaking independence. And is that so bad? I mean, why would that be so bad?
Well, again, I think you can have, some would say, well, so I'll unpack that a couple. You said you don't do a test work, so you can provide clients, you can sit at that bank meeting and provide financial insight that the client may not have thought of, especially middle market clients where they may have a controller, they may not even have a controller who really views themselves, who view themselves not as a strategic partner in the business, but as an accountant accounting for the numbers. So I think you've demonstrated right there that a CPA can be valued for their strategic insight, which I think is, you sell strategic insights, what you sell, and people pay for it. So it is a value. And you have clients who when you're the person that you're meeting with them and they're talking about what they're going to be doing next year and their plans for manufacturing or for distribution and how to maximize that. It's valued. I think the other side of it, though, and it is if you are providing the reviews, the quarterly reviews, the compilations, or even the audit side of it, if the bank requires an audit side of it. I think you said it to the point. You have access to a tremendous amount of financial information, and it's how you provide that. I challenge, and I we can play devil's advocate, but I challenge the notion that it's this or that. I think you can be this and that. I can't tell you, I think you should get a new software. I can tell you that your software is outdated and not able to do the things you need it to do to be able to manage your business correctly. That you have software that's old and outdated. It's funny, when I was a financial analyst at, you named the company, Quaker Oats, Unilever, Helene Curtis. When I was a financial analyst of those companies, most times and in most cases, I wasn't saying that we should do that. I was looking at historical information and using that learning from that historical information, using that historical information to help make better decisions going forward. Whether or not it's sales were down in this product line, whether or not, even when we introduced a new product, my analysis was, is it going to be successful? Well, I don't know. What share do you think you're going to get? What share do other people get? What do you think that's a reasonable market share based on? Do you think it's I get to ask the question, So here's the market share you're projecting. Here's a market share that's typical. Do you think that's reasonable? Is that a violation of independence? I don't think so. Even if I go to the sake of saying, you think you're going to spend this much money to support that new product introduction, here's what everybody else in the world spends. You can provide background information without telling them the answer. I don't have to tell them the answer. I can provide. It's hard. It's not easy to do.
It's a fine line, that's for sure.
It's a fine line, but the biggest reason is it's hard and it takes time. And then you go, well, why should I do that? Why should I do that if the client's going to pay me just to do the review? By the way, and let's put aside the fact that most CPAs don't even do audits or reviews. Most CPAs are focused on the tax side, where there's no independence issues. So I may do tax planning, which helps to think about the assets, or a CPA who does taxes should be thinking about being that most valued advisor on a reg. There's a small firm, I mean small, like two, 3 people in the Chicago area. And this is a guy who does a ton of tax work. And I will tell you, it's mostly compliance tax work. He's not a 30-year-old. I don't know how old you are, Hector. He's a lot older than you. Okay. I think there's a 7, I think, in the first digit of his age, right? And he has a client. Again, he does one audit, but all his other clients, he has a client, and he meets with this. He actually charges a retainer, and he meets with this client on a monthly basis to talk about how the business is going and what is she doing with this business. Now, I will tell you, most people don't do that. They're comfortable in getting done with the return, or maybe doing some tax planning on equipment or some tax planning on investments, whatever the case may be. Again, how do we, on the tax side of it, how do we think about on an everyday basis for my clients, how do we help that client become more profitable? I talked to a small national firm, a top 20 firm. I was talking to somebody in a top 20 firm. And I said, think about the mindset. And I said, this guy is top 20 firm, in that second half of the top 20. And I said, so when your staff, and he's a tax guy, no audit, right? So he's no independence issues, right? And I said, when your staff give you a work product, they usually just say, oh my God, here, I'm done. And they're happy to have it done, whether or not it's completion of a schedule or whatever the case may be. I said, what if you ask those young staff, and they're probably 20-something or 30-somethings. I said, what if you said, when you give you the work product, tell me one thing about that client that could improve their business. Tell me 2 things, actually. Tell me 2 things about that client. And he looked at me, he said, they wouldn't know what to say. And I said, I think you should do it. I think you should try it. He goes, well, if I do, I'll just ask him, try to come up with one thing. So, I think you demonstrated yourself that clients will value that insight. B, I think the independence thing makes it a little bit harder. I think that's a good excuse. I think it's a great excuse not to do it. By the way, we're going to hear a siren come by because we're in a main corridor for the ambulances, for an ambulance station in Chicago, fire station. I truly think the independence is a great excuse not to do it. It may be harder, but no question, I guarantee our auditors have so much information about us that if they thought about it the way a corporate finance person would think about it, from an analytical standpoint, from a strategic standpoint, they could say, if you notice this or if you notice that, and there's probably some things we haven't thought about. And I hope you can hear me because there's also construction going on in kitty corner from our office. So I'm hearing all this construction noise. So I truly think that's a cop-out to say that, well, independence doesn't let me do that.
So you have independence, which you just talked about. And then earlier, the other excuse was, we're busy, we're doing the compliance work, we're getting paid, right? We're getting paid
right,
for it.
Right.
We're being profitable. Our customers probably haven't even been asking for it, because that's the other challenge is I think most of the colleagues I speak to when they get into consulting or advisory, it's because their customer called them and says, I need help, I need advice. And they're sort of waiting for the customer to come in and kind of demand that from their CPA. But what's interesting is when they lose customers and they don't get a good insight in terms of why they lose them, the reality is the answer probably is, well, that CPA wasn't giving me proactive advice, but they don't
or by the way, which is really going to be the case, somebody could do it cheaper.
Right.
So and by the way, they're using technology and they're doing it cheaper. So
yeah, it's been commoditized. Correct. It's been commoditized.
Exactly.
But then you can argue. I think that the counter argument I would have to that is, hey, a competitor down the street, another CPA, offered it for cheaper, right? But the only way that the customer can compare apples to accountants is if the work is 100% commoditized. So I think in many ways an audit is that, because an audit from a small firm down the street and an audit from Deloitte, it is technically an audit, and it's it should be worth the same. I mean, in the circles of big companies, if it's not a big four, maybe they kind of dismiss the whole thing. That's possible. But in the greater context of things, in a global scale, a CPA is a CPA, and the license holder can sign those financial statements regardless of what they're affiliated with. But so that's the reality of it is, if a company is working with a regional firm, and let's say their bill is $50,000 a year, and all they're getting out of it is an audit, and the bank will be okay with a smaller firm doing it for half the price. The bank doesn't even know how much they pay for the audit. Then it's just completely a commodity.
Yep.
But when you go the other route, I think that you're talking about strategic value advisor is, all of a sudden, if you have a really personal relationship with the customer, you understand the nuance of the business, you understand their goals, you understand how their decisions affect the day-to-day operations, how the day-to-day operations affect their, again, feedback loop, their decision making, again, and how those decisions ultimately are with the purpose of reaching the customer's end goals, such as retirement, exit plan, whatever happens to be. Once the customer knows that you're sort of inside that loop, someone can come down the street and offer it for less expensive, but the other person is not inside that loop. So the customer can weigh in the prices, but then customers are savvy enough to know to get that other person inside that loop is going to have some cost component, right? Either me as a business owner are going to have to now spend time building a relationship with this person or with this firm, and I run the risk that they might not understand me. That's the other challenge, right? I mean, most accountants understand their customers really well. After 3 to 4 years of working with them, I would say most accountants are not really that good at understanding their clients their first year. But by that third year, they understand them pretty well. But then all these new accountants are specializing on specific industries and micro problems and specific technologies. They can give that impression that they understand the customer better from the get-go because they're specializing. So I think all accountants run the risk of not, if they don't build that strategic partnership, they run the risk of being commoditized.
And I'll tell you, and here's the other thing. You'll hear a lot of firms, two things I'll say to that. One, you will hear a lot of firms say, well, I do that. I do that too. Yeah, we did had some get-togethers, connection events with some really small firms, 1 to 2 to 3 person firms. And they all said, almost to a point, my client always calls me, but I wish they call me before they make a mistake. Now, the problem is, when they say a mistake, they're thinking about the tax implications, the whether you should lease it or buy it. They're still not thinking about whether or not, how do I be in the front end of the client, make it a good business decision they're not going to call me on the back end because they don't think about me as a CPA and accountant. They think of me as an advisor, and they do that. So I think you'll hear members also say, well, I do that. Well, I do it because the client calls me. They go back to the client calls me about a piece of equipment, which, here's the thing. The client should never be calling you until he's buying his equipment, because you should be talking to him when he's putting his budget together about what his plans are for the next year. The other thing you mentioned, which is so important today, things are great. We're making a lot of money doing audits and a lot of money doing comps reviews and tax. I do think about that future. This is not a profession that's changed today or tomorrow, but it's going to change over the next. We just did a strategic plan with our board, and most time when you do strategic planning, you say, okay, don't look out more than 3 years or so because no one knows what's going to happen beyond 3 years. We told the facilitator our meeting, I said, I want to look out 7 years. He said, why 7? I said, because I do know what's going to happen in 3 years. We're going to continue to move forward. 7 years, the whole world could be different. And your example of that regional firm, I don't think it's going to be that way. You said, the regional firm does a $50,000 audit and they get undercut by a small firm. What's going to happen in my mind is that small firm does a $30,000 audit. So the big four, well, they're going to go downstream as they can do things less and less expensively into those large regionals or small nationals. But you got those regionals that are going to pick up that technology, and all of a sudden that small firm that has that client that's not providing strategic value, just doing the audit or the reviews of the comps, but just the audit, right? Maybe doing it for $30,000, $40,000. Well, all of a sudden a large regional uses AI and RPA for their audit, and they go and they talk Main Street, and they come down and they take that client away. Why? Because they're not coming on price. The way that smaller firm is going to save themselves is, you said it. You have a relationship with your client. That client trusts you as their advisor. It doesn't happen overnight. You got to grow it. We have built a profession which is really great on what I call an annuity. We have an annuity model, right? We do. You get a review. You need a quarterly review every quarter. Boom, you get it done. It's an annuity model. It's kind of like printing money. You got to get tax return done. You got to get your taxes done every year. It's like printing money. Well, I'm concerned that the technology and the competition is such that annuity model has a hole in it. And the way to your point, you stop that is you make yourself invaluable. Again, there's a lot of reasons, whether it's independence, whether they won't pay for it, whether they don't have time. I think the firm of the future is going to be the firm that actually proactively says, I'm changing my model. I talked to a firm in Central Illinois once, and he said to me, I have a doc. He did tax work. Again, no independence issues, right? And he said, we also have to think how we charge for this. We have to think how we charge for it. So this firm, this guy, his partner at this firm, he had a medical practice, and he got called to a meeting by the board of the medical practice on a Saturday morning. He wasn't happy because it wasn't tax season, so he wanted the Saturday mornings off. He got called in this meeting. He had a chip in his shoulder, kind of. He said, I got called in this meeting on Saturday morning. They wanted to know they weren't happy with the profitability of the practice. And he goes, to his credit, he said, I told them exactly what they should do to improve the profitability of the practice. So he provided that strategic input. Now, did he do it proactively? No, it was totally reactive, right? But then I said to him, I said, well, good for you. I said, would you charge for that? And he goes, yeah, I charged a couple hours. I go, well, boy, they got a good deal, didn't they? So we also have to think how we're going to charge for it, which is a whole nother issue.
Yeah, that's a big conversation. Maybe let's wrap it up with that. I strongly believe, and I would love to know what you think, I strongly believe that a lot of these issues that cost us to be mired in these old ways, on the compliance work, on how we make money now and how we make decisions about our business model in the future, are predicated on how we charge. And because we are in the retainer, hourly, bill for your time model, the only incentive for us is to spend time working, and be able to justify it so we can invoice it and get paid. But there really isn't although we are an ethical profession that does have their client's best interest in mind, there is no underlying systematic incentive to focus on just creating value for the customer. Because whether it takes us 2 hours or 10 hours or 15 hours, we're not measuring the value we're creating. We're only measuring the effort that we are the inputs, right? The effort that we're putting into the job, into the work. So I think that if you are a forward-looking firm and a firm for the future, but you still charge by the hour, it is unlikely that you'll be able to make that leap.
Absolutely.
What are your thoughts
Absolutely. I couldn't agree more. And I'll tell you, I one of the best parts of being the CEO and president of the Illinois CPA Society is I talk to hundreds of members a year. And I was talking to a firm, and I'll share this, and then I'll tell you my view on it. I think absolutely that is another thing that is going to tie your hands. But again, it's if it isn't broke, break it. You know, and the other thing we say at the Illinois CPA Society is, you know the best reason to change, probably because you haven't. Best reason to change is because you haven't. So if it isn't broke, you probably should break it. And the best reason to change is because you haven't. Talking to a managing partner of a firm, and they were doing some due diligence work for a client. And the CEO, the managing partner CEO of the firm was talking to the client. They were looking at acquisition. And he told the client, potential client, he said it's going to cost X dollars. Client said, okay, fine. He assigns it to a partner in the firm. This is a true story. I'm not making this up. The partner he assigns it to comes back into the managed partner's office and has great news. Now, some would say this is unethical. What is value? Value is determined by what it's worth, not by the hours it takes, to your point. So the partner comes back into the partner who's assigned this job comes back into it's true story, managing partner's office and says, good news, it's going to take us less time to do that due diligence work. So we, in fact, can charge the client less. Now, what's it worth? Well, the client is probably thinking it's worth X, the first number, right? The managing partner looked at the partner and job he's going to assign to. Goes, you don't understand. It's going to cost X dollars. What he quoted, because to your point, what value is determined by what the client perceives as what it's worth. And if it costs $10,000, if I tell you it's going to cost $20,000 to do some due diligence work, if I tell you it's going to, by the way, that bank needs an audit. And if that bank says that audit, that audit's worth $30,000 because that's what the market has determined. Can you hear me? So if that audit's worth $30,000, by the way, if I use AI and RPA and I can do it half the time, you know what that audit's worth? $30,000. Why? Because it was worth $30,000 before.
Right. Well, it's technically worth more than $30,000 because
yes,
the way it works is it's always worth more than what people are willing to pay for it, right?
You're absolutely right.
Which is the reason why people pay for it in the first place, right?
Right.
No one will ever buy something that's worth less than what they're paying for. That reminds me.
But I will tell you, as much as you try to value price and audit, it's worth 30, it's worth this. That's where the danger lies, because if you let's say you have an audit and you charge $30,000 for this audit, that's all great and good, and you can do it for something less than that. You can do it for because you used AI and RPA and automation. I guarantee at some point in time, another firm down the street is going to use the same technology you use, and they're going to undercut you in price. I guarantee it. So you can try and value price, but eventually, and this is what we do as a profession, we get to the lowest common denominator, right? Price. Well, how do you stop that? Value. How do you stop that? Strategic value. Build that relationship. So if you said if the firm down the street comes in and says, I'm using technology and I can do it for $15,000 less than the other firm, that client goes, yeah, but are you going to be my business partner in helping me grow my business? Are you going to help me grow my business and become more profitable by the information you provide to me? And that is, I think there was a commercial. That is, I think some would say, priceless.
Correct. And business partner means you take risks alongside with me. That means that there will be whole chunks of work, whole chunks of effort that you will be able to put in a timesheet, but that will not go in an invoice because it's not tied to the value you create.
That's right. That's right.
Todd, for the people that like this conversation, that enjoy this, and they're buying into it, saying, I got it. I want to move into value advisory. This is the transition I want to make, whether they're in Illinois or not. What are the next steps? How do you suggest people to get started?
Well, So it's kind of funny. There's a firm I went to see about a week and a half ago. They read an article, and they didn't read Trust Is Not Enough. They read an article in our magazine called The Firm of the Future, and they read the article. Again, it was authored by Derek, and it wasn't authored by Derek, but he is our editor. And they called me up. They sent me an email and they said, "We want to be a firm of the future. Can I talk to you for 10 or 15 minutes on the phone to find out what I should be doing to be the firm of the future?" I emailed them back. I said, "Well, I'm not sure we're going to get done with this in 15 minutes." I said, "I think this is going to have to be a conversation in person." And even then, I said, it shouldn't be just you and I. I went out to that firm because, again, they're members. So I go talk to my members. Set up time, went out, talked to them, every partner in the firm for 90 minutes. I think we have to challenge ourselves. I think we have to. It is a process that any firm wants to do this, and I'm happy to talk with any firm in Illinois. I'm happy to talk with any firm, period. You have to set the goal. You have to decide what you want to be. You have to make sure all the people on the boat are good with the direction you want to go. You're going to have to assess your skills, and you're going to have to see where you have skills. You're going to have to be honest in assessing where your skills are, where your deficiencies are, if you want to be this firm in the future. And then you have to then seek out the training and development to obtain it, and then you have to develop plans to actually start implementing it. And again, implementing it people always get stuck in implementation because they go, "Well, the client won't buy it." Well, you know what? Do it, provide the value, and all of a sudden the client's going to go, "Oh, holy cow! I never looked at that. I never thought about that. Thank you very much." So it is not an easy process. It is one that we are committed to helping our members, and in fact, we're going to be putting some stuff together to really help our members move to that firm of the future, because it's not something you don't wake up one morning. And not every firm wants to be it. I talked to a firm a couple 3 or 4 years ago. I had a long 3-hour meeting with a firm, and at the end of the day, the firm, this is not wrong. At the end of the day, the firm looks at me and he says, the managing partner said, I can't get everybody on the same page. Well, they ended up merging because that's what they decided they had to do. So it's not an easy process. It is methodical, and it's not something that will happen by itself. But given the commitment, given the buy-in, given the right training, the right objectives, the right execution, it can be done. You did it. You provide that value to people, and people pay you for your insight. So it can be done, and it's gratifying as heck.
I agree, Todd. Thank you very much for coming in the show. How can people learn more about the society or get in contact with you?
Anyone can reach me at my email is Shapiro, SHAPIROT, as in Todd, Shapiro T at ICPS.org, or you can go on our website, ICPS.org, and you can contact me through our contact part of our website. You can contact Derek Lilly, who is our editor-in-chief of our magazine. Derek is with me he's with us on this journey of moving the profession forward. So reach out to me, reach out to society, and I'd love to talk to people about it. All right? And thank you very much, because I'm telling you, changing the tagline for the profession is not going to be an easy feat. To move from the most trusted business advisor to the most trusted and strategic value business advisor, I will jump on every platform I can to try and help move this profession forward. So it's relevant for decades to come along. So I truly thank you for talking with me.
Likewise. Thank you very much. I'll see you in Summit 20.
All right. See you at Summit 20. Bye-bye.